Hello and welcome to Business Reporter's Future of Financial Services and Banking campaign. I'm Ashley Blake. As the digital economy continues to grow at an incredible rate, accelerated even more by the global pandemic, businesses of all sizes are recognising the importance of digital delivery channels for future-proofing themselves. With so much commerce now taking place online, there's a huge opportunity to change the way that we consume financial services. Now, historically, you would only expect to be sold financial service products via a bank. Now you can get a loan from your garden centre, a bank account from your investment platform, or create a virtual card instantly in your phone. A key challenge to the growth of embedded finance is that to successfully build out these use cases, it requires a combination of API-first banking and payments technology and a strong license infrastructure backed by an expert compliance knowledge. So what opportunities does embedded finance offer to digital businesses? What part do large banks have to play within embedded finance? That's what we're about to find out from Dr. Ozan Ozark, founder of OpenPayd. Ozan, perhaps you can start by you giving us an overview of what embedded finance is and who are the key players.
Well, embedded finance is basically where you take financial services and you integrate it into a product and a service which the consumer then consumes. So as an example, if you're a marketplace or an airline, at some point in your journey, you are collecting funds. You're taking payment from your consumer. And that part of the journey is quite frictionful today. Basically, there are a lot of events taking place in order for that transaction to take place. So when you embed that product and service into your offering, you reduce the friction and you increase the success rate of your transaction.
So who are the winners? Is it the consumer or the merchant?
In this case, both parties are the winners because the consumer get a better offering at a cheaper price with spending less time and with less headache. The friction get very much reduced. The merchant on their end are able to secure that the transaction take place, basically are able to secure that they are doing their sale, and at the same time they can upsell or provide other type of services which are related to their overall offering.
So you talk about friction there that suffered from presumably the consumer. Just give us an example of a journey where it could go wrong, where the consumer gets to the payment part, but for some reason decides to go elsewhere.
Well, I think we all recognize the event where you are trying to buy an airline ticket and you have filled in, you have chosen where you're going, your passport details, your name, you maybe created an account, you spent all these verification exercises to prove that you are you and you really want to fly to the destination you're going. And at the very end, they ask you for your car details, and you obviously fill in your car details and are quite sure you're right, but you don't have the right connectivity, so your mobile phone doesn't receive the SMS to confirm the transaction. Transaction fails. Or everything goes well. You receive your confirmation SMS, you fill in the right data, but for some reason that transaction doesn't take place. Okay, so now you have to start all over again. That's a very bad consumer experience, and that's a very bad experience for the merchant as well, because both parties have kind of shook hands that you want the service, I will provide it. Now there's a middle layer that needs to work for that to take place. When that fails, the consumer gets upset with the airline because they're clearly doing something wrong, and the airline are losing out on business. So this is what typical example that we all recognize, that we are in a web shop, we try to consume something, we have to pay for it, we want to pay for it, we feel we have done everything right as a consumer, and the transaction still fails. Or you can have the typical black cab thing, like you're on your way home from a late night, and you come to your place, and suddenly their POS terminal doesn't work, or there's some other friction that you didn't expect when you consume that service. And you have to bring your wallet, go for cash. These are all type of events that creates a bad consumer experience that embedded finance can improve on.
And does that matter to the merchant, the journey that the consumer has taken? Because at the end of the day, all they want is a sale.
Obviously, because first of all, there's very fierce competition between various providers of online services. So the last thing you want to happen is that a consumer that you're able to attract to your website, that you are able to push through the whole sales journey, comes to the very end, and they're not able to consume the product that you're trying to provide them. Or maybe even worse, is that you're able to provide them one part of the service, but you're not able to upsell your service. Because what happens is that the consumer will buy something from you and then go into someone else and buy more from them. If you could provide all of those services to begin with, you would create a much bigger loyalty with your consumers. So this is very important for the merchants.
A seamless journey for the consumer and the merchant benefits.
Yeah, seamless journey for the merchant, seamless journey for the consumer as well, and the ability to consume more services through that journey.
So how does OpenPayd help with this?
We are a provider of embedded financial services. So what we do, we help an airline or an insurance company or a normal marketplace by providing a technology which makes the payment part much less frictionful than today. So you have the technology, and on top of that, we give them a license foundation, because we have a lot of different licenses that you need to have to provide these type of services. So not only are we able to help the merchant take payments, but we're also able to provide merchant new type of services they can provide to their consumers. Let me give you an example. We can help you get a credit line, so you can actually give a credit to your consumer, or we can help you open up a bank account for your consumer, or we can help you with better FX exchange rates. So all of these type of added services creates a better customer journey and a stickiness with the consumer, which is very important.
So what are the problems that digital businesses are facing with embedded finance?
There are several challenges in the embedded financial space today that make it very difficult for merchants to kind of integrate and operate the way they theoretically should be able to do. First of all, it's a regulated business. So you need to have licenses. So whoever provides you the service needs to make sure that behind them or as a part of their offering, there is a regulated entity that protects the merchant and the consumer. That's number one. Second of all, you need to have a technology that can keep up with the service you are providing. So if you're providing a service that needs payments to happen very, very fast, but the platform you're integrated to are working very, very slow, there will be friction between the two platforms that will result in a bad consumer experience. And the third one, you need to have a provider which understands the need of your business today and also where your business is going. Because by the time you integrate, you promote this to your consumers, market is moving on because it's a very competitive environment. So if I was a merchant today and I looked out in the financial space and we're looking for a provider of embedded financial services, it's very hard to find a provider that can cater for all three, basically having the regulated entities, the technology, and also the know-how of where the market is going.
I see. You touched upon regulation there and licensing. Tell us about the journey that OpenPayd went through to become licensed.
So obviously, this is a very regulated space. You're dealing with money and financial services, and you are dealing with multiple countries, multiple regions, and you have to deal with multiple regulators and different regulations as well. So what we at OpenPayd have always focused on is either to obtain our own licenses or partner with solid other companies that have the regulatory part in place so we can build our service on top. Because just having great technology and a lot of know-how doesn't bring you all the way through. Your clients, your consumer, your partners, any third party you work with expect you to have the regulatory foundation in place. So this is very critical.
So I'm a business. I've been with my bank since the start of my business, who have supported me. I have a certain amount of loyalty with them. Why can't I just use them?
Most existing payment providers, and especially banks, do not have the complete product offering that a modern digital business today would like to consume. Because businesses today, let's say you're a marketplace, like to give out credit. They like to provide exchange services. They like to give out bank accounts. They like to add added services to their consumer in order to do more sales. So if I was working with only one traditional bank or an existing payment provider, they might be very good at that specific service they're already providing. But the minute you take a step out and you want to add another service, your traditional bank might not be able to help you out. So combining an embedded financial service provider like OpenPayd with your existing banking relationship or payment provider is a very smart move for most digital businesses.
So is it a collaboration between OpenPayd and the banks, or are you competing?
Any provider of embedded financial services like OpenPayd are taking a step into the turf of the existing payment provider, very often the bank. But this is not about competing with the banks, because OpenPayd and other companies like us, we need the banks in the back anyway. What we are adding more services, being able to consume in a better way with the banks as a partner. So it's not about embedded financial service providers versus the bank. It's more about what does the consumer wants, what does the merchant want to provide to the consumers, and how can somebody like us provide a frictionless event where the consumer can consume a variety of services, most of them in financial services, but also non-financial services that comes with it.
So where do you see the collaboration and the relationship between banks and fintechs, say, within the next 5 years?
First of all, most people trust their banks. So the banks have the benefit of having a huge audience, existing client relationship. Most people get their salary into a bank. There's a reason for that, because they trust the banks. They have a relationship. Maybe they have a car mortgage, a house mortgage, or a car loan. They have some kind of relationship, a stickiness with their existing provider. So I tend to see the banks as, on one hand, one of the key players in this space, because they have the audience, they have the user base, but they might not have all the various services the consumer needs. We can go in and we can supplement, we can fill in those gaps that the banks have. And on top of that, we see the banks as a partner in the back. So at the end of the day, when I take a payment and I do something with that fund, settle it, exchange it, send it, I have to touch the banking rails. So one way or another, you will be working with at least a few banks in the background. So I see the banks both on the consumer-facing side as a huge database of clients that we can help provide better services to, but also on the back end, that at the end of the day, we need the banks to be able to send and receive money.
So you'll be a welcomed new player to the field?
Absolutely. I think a lot of existing banks, big banks that have a certain business model, are having challenges with the changing in regulatory environment, and also how new technology are providing competing services. So if I was a large tier 1 bank, I would be concerned about how you can get a big organization like a bank to keep up with the very fast changing trend in payments and financial services. That being said, the banks have a huge advantage in other fields, and if they use that advantage as their brand recognition, the huge customer database, their existing stickiness and knowledge about their clients, and combine that with added services from a company like OpenPayd, their offering will be much better, and our life as a payment provider or an embedded financial service provider would be much easier as well. So there is room for collaboration here.
Excellent. Ozan, thanks very much for coming in and explaining that to us. Thanks very much.
Thank you for having us.